Mehta now joins in. Dipan, hi, good morning. We have about 6 or 7 days now for exit polls and about 10 days in terms of trading sessions for that 16th May event. Ahead of that, how would you position your portfolio?
I've been saying that we should get a bit cautious. It's a major event coming up and could make or break this market. So I would say that we should enter into the event with a little bit of cash on the portfolios. I think for traders it's going to be very difficult how they should manage their positions. But from even a long-term investor point of view, one would be better off just being a little bit in cash. And no doubt if the election result is positive, stocks may open gap up or may not give an opportunity to buy. But then I think the cash which you have in your portfolio can be deployed suitably and appropriately over the next few weeks thereafter, given that many more opportunities will open up for investment and a lot of new ideas also will flow through. So I would like to just enter this particular event on a safe zone with adequate cash on the books.
Dipan, hi, good to see you in this morning. What about, say, somebody who's invested in BPCL at the start of 2014 and has currently made 36%? Would you recommend for investors to possibly book profits at this 36% gain that they're sitting on?
See, I think if the position is not very big in the books of the investor, which means it's not a sizable or a core holding, then it makes sense to hold on to that stock at this point of time. But if it's a sizable holding, then certainly one should take a little bit of profit off the books at this point of time. Because I think the oil sector is going to be amongst the first sectors which will be taken up for some kind of a reform. In any case, I think a lot of the diesel losses have got covered over the past 2-3 months or so, and as soon as the elections are over and done with, even before the new minister takes charge, you would have maybe 1 or 2 small hikes in diesel. So that particular problem is on its way to getting solved. But I think the larger question of autonomy, that will be addressed only once we have a government in place. And there too, I think the stability of the government is important, because any form of reforms in the oil sector require tough measures, and tough measures cannot be taken by a lame duck government which is dependent on several coalition partners which are within or which are supporting the government from outside. So I think the oil sector is the most sensitive to the nature of the government and how stable it is.
Dipan, we've seen a bit of rally in some of these forgotten stocks, or sectors, Century Textiles, Orient Paper, HSIL. What's happening in this particular space? Anything in particular that you've spotted?
So I think they're basically playing catch up. There is no denying the fact that there is increased participation, be it from foreign institutional investors, domestic mutual funds, or even retail investors. The maximum, I think, increase in participation has come through from retail investors. So we are seeing many more players in the market, and when there are more players, then obviously the number of stocks which they are looking at tends to increase. And some of these stocks, are typically favored by retail investors and have been ignored by the mutual fund or the institutional investors. And now that they've come in the market, not at the levels that would suggest that all the money which is waiting in the sidelines has got invested, or that we have a full-blown retail rally, nowhere close to that. But certainly, I think the pickings have started over there as far as retail investors are concerned, and they are nibbling into these stocks. Also, volumes are typically very low in such counters, and even marginal buying tends to take these stock prices up. And this is typical of any market which is at new highs and stabilizing over there. Even the advanced decline ratio is improving even on the days when the Sensex and Nifty are down. So this is part and parcel, typical characteristics of a kind of a bull market. And if you have a good positive election outcome, then I think this particular trend only will expand many-fold, and you will see many more counters in the small mid caps coming alive, and a lot more activity from retail investors. Typically what happens, some operator driven stocks also get into focus, and that whole cycle of money coming into small mid cap stocks gets exaggerated. So I would say that even for this nascent pickup which we are seeing in some of the unknown names, a favorable election verdict is important.
What about power? as a sector? How do you approach that pre as well as post elections, and your view on the likes of, say, a Tata Power, which has lost around 9.7% YTD? Would it be a good time to accumulate Tata Power?
Yeah, I think the power stocks could be a good trading bet, and they have been underperforming by a large margin, and the expectation that reforms would take place in the power sector as well will boost the sentiment over there. But do keep in mind that a lot of the power related issues also require a lot of cooperation from the state governments, and then there are certain very tricky issues like linkages which cannot just be solved by change in government. So for the power companies to actually start reporting a good set of numbers, or improve the productivity of their assets, which is what the main problem is, that may be 6 to 12 months away, maybe even longer. But then I think rising tide will lift all boats, and power sector stocks have been depressed for a long time, and they would get some attention, and that may cause a rally over there. But I think from a long-term portfolio investor viewpoint, I don't know whether you want to be in sectors like power, where typically the return on capital is extremely low. And if you were entering and certain that the interest rate regime has turned and interest rates are going to come off by 100 to 200 basis points, then interest-sensitive sectors, capital-intensive sectors could give good return. But at this point of time, at least that particular scenario of lower interest rates is at least a few quarters away.
Dipan, has Hindustan Unilever corrected enough for you? Would you put some money in this stock or not yet?
See, we are very positive on FMCG stocks, but the best way to play the industry is through the Indian FMCG companies. No doubt Hindustan Unilever is a great company, but a lot of their products are typically in the mature life cycle. Soaps, detergents, the volume growths are going to be low single digits, whereas a lot of the volume growth in the FMCG sector is coming from value-added products, products which are about to pick up more consumption, be it cosmetics, be it insecticides, or for that matter food products, nutritional products. So although the FMCG sector is a good growth sector for investors, it's important to be in the companies which have got products where we are seeing double-digit growth rates. And the best way to play the sector would be through the likes of Godrej Consumer or a Marico or even a Dabur India. And we have seen that these companies have been consistently outperforming the larger multinational FMCG companies like HUL. And I think over the past few quarters or so, a lot of the Indian FMCG companies have diversified their portfolio adequately. They have gone in for exports or acquired overseas subsidiaries, so they are getting benefits from rupee depreciation as well. And I think in terms of quality, corporate governance, dynamism, I think they match any MNC FMCG company. So positive on FMCG, but would like to play through Indian FMCG companies.
Okay, all right, Dipan. Thanks very much for that. So that's Marico, which is actually reacting to what brokerages are calling a strong performance for Q3 FY14 as well. But thanks, Dipan, for joining in and giving us your view.